Assalamu alaikum and hello everyone. Welcome to this advanced taxation practice classes for March 2023 exam session. These classes will be conducted for 4 days. The first 2 days, like today and tomorrow, will be conducted by myself, Rana, and the remaining 2 days classes would be conducted by my co-tutor named as Mr. Kambaraza. For today and tomorrow class, the time will be from 8 p.m. to 11 p.m. according to Pakistani Standard Time. And here is my brief introduction. My name is Rana and I'm a ACCA member, currently teaching taxation, financial reporting, and advanced taxation paper. And I also worked at KPMG's taxation department and dealt multiple tax aspects. The core area was indirect taxes, but I also did transfer pricing projects with different other countries by having different projects with other KPMGs in different countries. Quickly recap the ATX paper format. There are basically 4 questions are examined. The first, and the paper is divided into 2 sections, A and section B. Section A is mainly for 60 marks and section B is mainly for 40 marks. In section A, there are 2 compulsory questions. The first question is for 35 marks and the remaining one is for 25 marks. The other section B questions, there are 2 questions, both are compulsory. There is no choice of question. And in section B, each question worth 20 marks. A very important thing that we can gain 4 professional marks in section A and normally for which is part of the question A for 35 marks. These 4 marks are normally included in 35 mark questions. And furthermore, there is always a question on the ethics area and maximum for 5 marks. If you have practiced from your kit questions, you should know that normally more or less things are same with respect to ethical issues. So we just need to keep the things with respect to the code of ethics, and we can answer easily to gain 5 these marks. But importantly, the 4 professional marks will get changed from upcoming session from June 23 onwards. The exam pattern for ATX is going to change. From June 23 exam session, there will be 20 professional marks. And it's not easy to gain 20 professional marks because for gaining these professional marks, there are multiple aspects to be considered while answering your question. Because we are attempting a professional paper, we should write our answer, we should construct our answer in a professional manner. Like, for example, for 35 mark questions, for the first question, which is for 35 marks, that is always based on a memorandum, on a report form. You have to write few specific things at the start and at the end of the solution. Normally, the report is asked, you are required to perform few steps, few things, few requirements. And normally the requirements are given by your tax manager. And normally your status is a tax senior, right? How you can gain these 4 professional marks in while attempting section A and mainly for 35 mark question. Start your answer with a formal report format, like what you are doing, what is the subject line, for which client you are working for, what are the issues to be addressed in your report, and your designation and the relevant date on which you are sending this email, right? If you follow the specific format, for surely you can gain these 4 professional marks, right? But keep remember, it's not only about the starting point, it's also based on the overall answer which you have constructed, right? On the next slide, few key advices for passing ATX. If you have read any examiner report, by the way, this point is also mentioned here, read technical articles and examiner reports. Let me guide you a point with respect to examiner reports. By the way, if you are going to attempt ATX, and if you are not following the examiner reports, you are making a big mistake. And the same point for any other paper at professional level, if you are attempting any paper and you are not following the examiner reports, so you are not doing well. Because in examiner report, you will come to know that in the past exam, what examiner asked the student to do and what they actually answered. What are their flaws, where they went well. It's basically examiner report talks overall performance of the students, that what they did in their solutions, right? And in the examiner reports, you will come to know a concluding point that report says that normally what happens is that a student write generic points and examiner don't want generic points. Examiner always asks student to link your answer to the case study or the scenario. So if you want to pass ATX, don't write the journal points. Even if you are required to write the journal point, okay, do write it. But afterwards, you have to link that point to your question scenario, your case study. What's actually happening in the situation, you have to link with the generic point with that specific scenario, right? Furthermore, effective time management. Let's say we are attempting a 3 hours paper, and in 3 hours paper, there are 160 minutes in total. 180 minutes in total. And if 180 minutes are divided into 100 marks paper, so you are having 1.8 minute time to get 1 mark. And in fact, if you are solving a 35 mark question, so simply multiply with 1.8 with 35. It means you have 63 minutes to solve the first question in section A. And same goes for 1.8 into 25. You have 45 minutes time to solve the second question. And 1.8 into 20 marks, you have 36 minutes to solve each question 3 and each question, and 36 minutes for question number 4. So this is how you should try to solve the question in the required time. What happens is that, let's say we are stuck on any point in question, we are spending more time. It means if we are spending more time and over and above time, which is allowed, which is specified for doing a question, so it means you are compromising your time for next question, which you can do. Which question should we attempt first? Okay. There is no choice of questions. All 4 questions are compulsory to attempt. If you are looking at which question you should start, it means you are again wasting your precious time while deciding whether you should attempt question number 1 first or 2 first or 3rd, or don't do like that. If paper opens in front of you, start attempting the first question. But for attempting that specific questions, what are required things? Now I'm going to tell that. For attempting any question, please do 2 things first. plan your answer, read the requirements very carefully. Yes, I'm going to share the today's agenda, Esther. Don't worry. And in that specific question, we shall be talking about the ethics area as well. And in our today's session, I have planned the first question, which is from the exam question 1, September-December 22 exam session. So we'll be solving the ethics area as well. Don't worry. But as we are talking about the key advices for passing ATX, and we are talking about the second point, effective time management with respect to two things. With respect to total mark per question, as I have guided you, if you are solving 35 mark question, 35 into 1.8, so you would be getting the total time for doing the question 1.8 minutes into 25 mark question, you would be getting the 45 minutes time to solve the second question. It means you have to restrict yourself. If you have spent 45 minutes on question number 2 for 25 marks, and if you are unable to complete the question in the required time, stop that and move towards the next question. Do not waste your precious time on doing the same thing which you are unable to do in the required time. Furthermore, as we are talking about time management, so time management is also important with respect to the subparts of the question. Let's say for requirement A, for requirement B, each requirement specifies the related marks. Let's say if you are solving the first requirement, which is for 5 marks, so 1.8 into 5 marks, the desired time will be in front of you. Try to complete that subpart in the required time. And considering marking scheme while attempting the subpart of the question, and furthermore read technical articles. By the way, there is no need for additionally reading the technical articles, because normally the tutor does this thing that the technical articles areas are also the part and parcel of the TX and ATX syllabus, and we normally do cover the technical articles while lecturing the relevant topics. But still, at your end, you are required to read the technical articles just to quickly revise your things, your knowledge, and examiner reports. And one of the point in examiner report is that the students who are high scoring students, the student who pass their exam with high marks, they write less. They don't write more and more. They do write less. Mose, we shall be discussing this point as you are asking, is it advisable to read the full question before attempting, or we should approach it based on question asked? I would be guiding you. Please wait for the minutes. I'm telling you about the examiner report. One of the point in the examiner report is that the student who is passed their exam in with high marks, they write less. How they write less? And by writing less, how they are able to achieve the high marks in that paper? The best answer of this question is they plan more. If you want to pass your ACCA professional level papers, put your precious time on quality planning. There are two things, precious time and quality planning. How we can plan our answer, as just asked by a participant. First of all, how we can plan our answer? First of all, the first thing, read the requirements carefully. Then go towards the scenario and read the scenario by keeping the requirements in mind. And note down your key points while reading the question. You also have a rough page given by ACCA team during exam. So as you have read the requirements very carefully, now you are well aware of this thing, that what are you required to do. And while reading the scenario, just mark the key points on your rough page or the area which is also given in exam and you can use that area not for the answer but for the extra workings, right? Furthermore, if you are not if you have passed your TX 2 or 3 years ago, and obviously if you are forgetting any TX knowledge thing, and Multiple things, videos, short questions, practice questions are also available on ACCA Virtual Learning Center. ACCA VLC is the link is in front of you. If you want to revise your TX knowledge thing, you may follow this link. There are short videos, there are MCQ questions. These things can be used for quickly revising the TX areas, right? Furthermore, grasp professional marks and layout of your answer as discussed here, that you can get these 4 professional marks by overall answering the layout, the format you are adopting while answering your question. Keep remember, don't forget to read the examiner reports. That's very important to know that what should we do while sitting in exam, right? ATX passing rates. The highest passing rates are 44 in any attempt, and the lowest passing rates are 30% worldwide. We are having 21 attempts passing rates in front of us from September 17 till December 22. These are 21 attempts. And obviously one of the attempt is missing. Like you can see after March 20, directly September 20 exam results are in front of us. June 20 is not there because due to COVID, no exam held for June 20. Whatsoever is a passing rate of ATX, what we are required to do, we should remain in the percentage, whether it's 30%, whether it's 33%, whether it's 43% or 44%. We should be there in the passing rate percentage so we can pass exam. And how we can pass exam, there is only one solution. Do practice more and more. There is no other option. The quantum of the things at ATX level is too much, and there are multiple petty areas as well. So only one thing we can do is that we can practice more and more questions to pass our ATX exam. And finally, the agenda of the first 2 days classes of ATX workshop is in front of us. Day 1, like today, 22nd Feb, we shall be doing 2 exam questions. Exam question 1 and 2, both from the same exam session, September, December 22. And tomorrow we shall be doing the exam questions from September, December 21. That is question number 3 and question number 4. Deliberately, I have decided these 2 questions are from section A of the paper, and these 2 questions for tomorrow from the section B of the paper, right? ACCA examiner for each and every paper, ACCA examiner reports are available on the ACCA Global website. And the best approach for doing practice is to practice more questions on ACCA CBE practice platform, the resources which are available on the ACCA Global platform. So we should open the question from there, and we should attempt the question there, not manually, not in your register, not in your normally MS Excel or MS Word. No, you have to follow the spreadsheet or the word process area in exam, and you have to face the spreadsheet and word process area in exam. So it would be beneficial to practice at the same platform which is available on the ACCA Global official website. As we have marked the agenda for today's discussion of day 1, and we are going to discuss about the exam question 1 for September, December 22. But before starting this question, what I have done is that I have extracted the areas tested in this question, in this specific question. And first of all, we shall be quickly revising the relevant areas. Then afterwards, we shall be applying the knowledge to the actual exam scenario, right? Hopefully this approach will be better, because we can maybe possible a few areas are not revised by any of you. So we shall be discussing quickly about the areas tested in this exam question 1 of September, December 22. Then we shall be doing the same question. And a student is asking, sir, if someone is able to attempt a mock exam, are you available to mark the same? Yes, I'm available. It's on your discretion. If you are really fair with yourself, for surely you would be trying to solving the mock mock exams, and I'm here. You can share your answer with me. I would be checking, I would be answering that where you went wrong, where you did well, and overall performance in exam. I'm here to guide you, but again, you need to decide whether you want to attempt mock exam or not. I'm here to help. I'm here to mock. Don't worry. Okay. So the areas tested in exam question 1 of this attempt, there are few areas, like we'll quickly revise the relevant areas. And I would appreciate if your active participation, if I ask any question, and if you know the answer, please share. So it is gonna beneficial for all of us, because this workshop should not be a like one-way communication. I would appreciate you guys are going to sit in exam. So I'm expecting active participation from all of you. The areas tested in exam question 1 of recent attempt, the first requirement, as I told you, with normally in the 35 mark question, normally there is a requirement with respect to the professional ethics and all that. You and I, being finance professional, either we are a student, or we are tutors, or we are practicing lawyers, we are practicing professionals, and we are professional tax advisors. All of us are required to follow the ethics. And the ACCA Professional Code of Ethics and Conduct set out few standards which all of us are required to follow. And failure to comply with this code could lead to disciplinary action, right? What are the code of ethics? What are the fundamental principles of this ethics? These are the journal points: objectivity, professional behavior, professional competence and due care, integrity, confidentiality. You must have studied these points in your financial reporting paper, in your auditing paper, in like AAA paper at ATX level as well. These are the journal points, but these points, the fundamental principle of the ethics, are different from every perspective. If you are doing like, if you are an audit professional, the way to answer, the way to incorporate these things is somehow different. But if you are a tax professional, if you are attempting ATX paper, then fundamental principle remains same, but the answer, the way of communication would be different while attempting ATX paper. Let's quickly revise the things. What is objectivity? There should be no biasness or the conflict of interest between the parties. What is professional behavior? You and I are required to compliance with the relevant laws and regulations as we are doing the tax paper. So we should be compliant with the taxation laws. Professional competence and due care means we should have knowledge and skills for satisfactory work, and we should have the like appropriate knowledge for dealing with the clients, for dealing with the tax authorities. So that's included in the professional competence and due care. Integrity. We should be honest. Being a finance professional, being a tax professional, honesty, integrity is the very, very important point. Integrity while dealing with the professional relationships, while dealing with the business relationship, integrity should always be there. Confidentiality. Normally at ATX level, this thing is normally examined by the examiner. Let's say you can see in your kit question, normally there is always a scenario like this. If a client of your firm is not like interested to return an amount which is, and that the specific scenario in the question which are going to attempt now, if your client is not like agreed to show an amount in the tax return or want to evade something, what should we do? Should we leak the confidential information? Should we write to HMRC directly or not? So such kind of issues are addressed in confidentiality. Confidentiality says information should not be disclosed to third parties. There is a legal, unless there is a word is missing here, unless there is a legal or professional right or duty to disclose. Let's say if there is money laundering, still you cannot disclose a money laundering directly to the HMRC. There are few steps involved. There is always a money laundering department at your firm. First of all, you should contact at the money laundering department at your firm, and then they will decide that what are the required steps, right? But normally confidentiality should not be broken at any point in time. Don't worry, we shall be applying the knowledge from this discussion in the exam question after a few minutes. Another area which is examined in this exam question 1 of September-December 22, that is with respect to the capital gains of the companies. Capital gain tax is applicable for both individual and for companies, but then obviously for company, we do not use the word capital gain tax because company do not pay capital gain tax separately. For companies, capital gains are added to the company pro forma on which the corporation tax is applicable. So whenever you would be finding the capital gains for companies, you will never be finding the word capital gain tax for company, because capital gain tax for company, there is no capital gain tax for company. Basically on the companies, corporation tax is applicable. For individual person, capital gains are recorded separately and taxed separately, but for the companies, capital gains are not taxed separately. Capital gains are added to the company's pro forma, so that corporation tax is applicable on the capital gains of the companies. So that's the basic point. And capital gains, who pays it? Every UK resident, each UK resident is required to pay capital gain tax. That resident person could be an individual person, that resident person could be an individual person, and as well as the company being artificial person. So if the company is a UK resident company which is incorporated in UK, or the basic decision making is held in UK, then it doesn't matter where the company is actually registered or not. If the board of director meetings are conducted in UK, and if the actual the main decision making is held in UK, it means that company is a UK resident company. So for company, for meeting the residence status, 2 points are there. Firstly, the company is incorporated in UK. Number 2, even if the company is not incorporated in UK, but the management is dealt from UK, the major decision making is being held in UK, still the company would be treated as a UK resident company, means that company would be meeting the definition of chargeable person for capital gain purposes. So the basic requirement for companies, which company will pay the capital gain? Any UK resident company would be paying the capital gains. And what is UK resident company? Any company which is incorporated in UK that would be meeting the definition of chargeable person. So that company will become the UK resident company and has to pay the capital gains. And there is taxation on the capital gains of the companies. Number 2, chargeable gains would be calculated at time of disposal by deducting, you can see not only the cost is mentioned, but index cost is mentioned here. A very key difference, whenever we have to calculate the capital gains for companies, then what we do is that from the disposal proceed, we deduct the indexed cost. Index cost is that cost in which indexation allowance is added, and indexation allowance would be calculated if the asset purchased by the company before 31st December 17 and now disposed of. Keep remember a very key point. If a company has acquired any asset after 31st December 17, then there would be no indexation allowance for that company, because indexation allowance concept frozen at 31st December 17. So basically now there is no indexation allowance concept in UK because this concept freezed at 31st December 17. It means for companies capital gains calculation, we shall be deducting the index cost from the net disposal proceeds. And I have guided you what exactly is this index cost. Any cost in which indexation allowance is added, that cost becomes the index cost. And indexation allowance would be taken for the asset if the asset is purchased before 31st December 17. And if the asset is purchased after 31st December 17, no indexation allowance would be added to the cost of asset. Furthermore, for capital gain tax calculation of the company, we shall be deducting the index cost from the net disposal proceed. What exactly do you mean by this net disposal proceed? Keep remember, from the disposal proceed, if we have incurred the cost of disposal, like for example, if the company has paid any commission to commission agent, if the company has incurred advertisement for selling the asset, that advertisement cost. Furthermore, if the company incurred transportation cost for delivering the asset. So such costs basically are termed as cost of disposal. So we shall be taking the net disposal proceed by deducting the cost of disposal from the DP, and then from the net disposal proceed, the index cost of the asset will be deducted. Furthermore, keep remember, I'm not going to discuss the entire capital gains for the companies. As I have guided you, we are purely discussing the relevant areas which are tested in exam question 1 of the September-December 22 paper. Furthermore, the next point, capital gain group. There is a concept in the capital gains of the companies. The concept name is capital gain group. For capital gain group, there are two conditions. Multiple companies can be part of the group. Which companies? In which the direct shareholding is more than 75% and indirect shareholding is of more than 50%. If the companies meet the shareholding requirement, then the companies would be the part of capital gain group. What will happen if multiple companies are in the CGG, capital gain group? The basic impact will be there would be no gain, no loss. There would be no gain, no loss if the asset is transferred within capital gain group companies. For example, company A, B, C are in the capital gain group. If any asset sold or transferred in between A, B, and C, then there would be no gain, no loss calculation because the companies are now in the capital gain group, and we cannot say these gains are exempt. No, exempt is something different. No gain, no loss is something different. Whenever the company is in the same capital gain group, no gain, no loss would be calculated, right? Any transfer of asset, at time of any transfer of asset, there will be no gain, no loss. Further few points. If you remember, whenever a business asset is disposed and a new business asset is acquired, at that time, we can claim a relief named as rollover relief. I repeat, when a qualifying business asset is disposed of and the other qualifying business asset is purchased, at that time, a relief named as rollover relief can be claimed. Now, what is qualifying business asset? Any asset which is used in the trading activities of the business. Company's goodwill is not treated as a business asset, but individual person business goodwill, sole trader business goodwill is treated as business asset. Company's goodwill is not treated as a business asset. Keep remember, I am repeating for the last time. Sole trader business goodwill is treated as business asset, but company's goodwill is not treated as a business asset. On disposing of qualifying business asset, gains can be rolled over if the other asset is purchased within the qualifying reinvestment time period. When we can claim the relief? If the investment is made in the new asset in the qualifying reinvestment time period. And the qualifying reinvestment time period is basically total 48 months. And the 48 months can be checked 12 months prior to the disposal and 36 months after disposal. Let's say in today's date, which is 22nd Feb 2023. Let's say in today's date, we being a company are disposing an asset. Are we able to claim the relief? We have to check whether we purchased an asset within the last 12 months before disposal, means within the last 12 months before today's date, if you have acquired an asset, or from this date, from today's date, if within the next 36 months you would be purchasing an asset, then the investment would be meeting the qualifying reinvestment time period and you would be able to claim the relief. That's in total 48 months, 12 months prior to the disposal and 36 months subsequent to the disposal. Any asset purchased in between these months, then the rollover relief can be claimed. Further point, rollover relief can only be claimed on the plant and machinery items, but these plant and machinery items should not be portable or moving items. For example, motor vehicle, although it's a plant and machinery, but rollover relief cannot be claimed because motor vehicle is a portable or moving asset. So that's the reason rollover relief can only be claimed on the fixed plant and machinery, which is not movable or portable, rollover relief is not available on portable or movable items. It's basically available on the fixed plant and machinery. It is basically available on the fixed plant and machinery, not available on portable or moving items. But the new asset should be purchased within the qualifying reinvestment time period. The condition of investment we have already discussed above. Furthermore, if the new asset purchase value is the deciding point for the value of relief. Now, we have discussed the first point. The asset sold should be the qualifying business asset, and the asset purchase should also be the qualifying business asset. Means both should be the business assets. The asset sold and the asset purchase both should be the business assets, and the investment should be made within the qualifying reinvestment time period. Rollover relief would be available on the fixed plant and machinery items, not on the movable or portable. Furthermore, what will be the amount of the rollover relief? The new asset purchase value is the deciding point for the value of ROR. Let's say you are disposing old asset for 300,000 and acquiring a new business asset. Let's say all of the above conditions are met, like qualifying investment time period, business asset condition, all of the conditions are met. If you are disposing an asset for 300,000 and you are purchasing the new asset for 500,000, it means you have rolled over the complete amount of 300,000 for buying the new asset of 500,000. So that's a complete reinvestment. In this case, the total gains can be covered by rollover relief. We can claim the entire amount of gains under rollover relief because we are making the complete reinvestment. Or on the other hand, there is a different situation. Let's say you have disposed the old asset for 300,000, but now acquiring the other new business asset only for 150,000. It means you are having 150,000 in your pocket, which are still left. In this case, partial relief would be available. Partial ROR can be claimed, and the uninvested amount would be taxed immediately, would be chargeable immediately. So the new asset purchase value is the deciding point for the value of rollover relief, that how much ROR we can claim, that based on the purchase value of the new asset. If you have invested completely, then complete ROR can be claimed. And if you have invested partially, then partial ROR can be claimed. Last point, as we are talking about here, we talked about the capital gain group companies. If the shareholding conditions are met, companies would be the part of capital gain group. Group rollover relief is available for capital gain group companies where qualifying business assets sold to and purchased from unconnected or unrelated companies. What exactly the meaning of this statement? Let's say company A, B, and C are in the capital gain group. Company A disposed an asset to Z Limited, which is an unconnected company. Company A, B, and C are in the same capital gain group. Company A disposed its asset to an unconnected company named as Z Limited. And the other group, company B, let's say company B in the group purchased a business asset from X Limited. You can see A, B, C are in same capital gain group. Company B is disposing its asset to Z Limited, and company B is acquiring an asset from X Limited. In this case, all these companies are in the same capital gain group. So same rollover relief concept is applicable in between A and B. For CGG purposes, these companies are considered as a single unit, as a single company. In this case, both companies would be able to claim the rollover relief. So that's the meaning. Group rollover relief is available for capital gain group companies where qualifying business assets sold to and purchased from unconnected companies. But these companies A and B are in the same capital gain group. So these companies would be able to claim the group rollover relief. Is that okay? If you have any specific queries with respect to the concepts discussed with respect to the company's capital gains, you may please ask. And if you are okay, we can move forward and can start discussing the other areas which are tested in the exam question. I'm getting the one question, is the last 12 months to test that the asset being sold? No. Let's say we are disposing an asset in today's date, which is 22nd Feb. And against the asset which is sold in today's date, are we able to claim the relief? We have to check if we have purchased an asset within the last 12 months. From today's date, if we have purchased an asset within the last 12 months before today's disposal, against the purchase value of the asset which is purchased in the last 12 months, we are able to claim the rollover relief. Or let's say if within last 12 months no asset is purchased, then from the disposal date, now start checking if you will be purchasing any business asset within the next 36 months after disposal, then against the purchase of that asset, you would be able to claim the relief. And for claiming this relief, there is an election time limit. That this point is not mentioned here. Please listen carefully. Now, for electing this relief, there is a time limit. This election for claiming the relief should be made within the 4 years from the later of 4 years from the later of the year end of 2 dates. The date when the asset is purchased, the date when the asset is sold. Do compare these 2 dates. When the asset is sold, when the asset is purchased, take the later of date. Then from the later of date, do end the accounting period. And from the accounting period of end of that date, move forward 4 years, you would be able to elect whether you want to claim the relief or not. Okay, if you are okay with the things, then another area is tested in this exam question with respect to the VAT implications for companies. And the specific area name is the land and building concept. The relevant area which is tested in this exam question is with respect to the land and buildings. Quick recap. For VAT purposes, land and buildings are categorized into 3 categories: standard rated land and building, zero rated land and building, and exempt land and building. Standard rated land and building are new commercial buildings. Zero rated land and building on which 0% VAT would be charged, residential and charitable buildings. And exempt buildings means on which no output VAT, no input VAT is recoverable, no output VAT can be charged. So that would be meeting the definition of exempt. Any old commercial building. VAT, whether the VAT implications are for companies, whether the VAT implications are there for companies or for individuals, both are same. But specifically, we are according to the exam situation, we are talking about exam question 1. So there are VAT implications asked for companies with respect to land and building. So we have quickly recapped that land and buildings are mainly categorized into 3 categories: standard rated, which are new commercial buildings; zero rated land and buildings are residential and any charitable buildings; exempt land and buildings are any old commercial buildings. Means the new commercial building is any building which is like which building is considered as new building? Any building which is constructed within the last 3 years. Means for the first 3 years the building is treated as new, and after 3 years the building is considered as old. And we are talking about commercial buildings, right? For the first 3 years, building would be considered as new commercial building. After 3 years, the building would be considered as, yes, for less than 3 years, the building still remains in the category of new. After 3 years, the building would be falling in the exempt as old commercial building. Another important point with respect to the exam question scenario, if the companies are registered as a group for VAT purposes. If you remember the knowledge from ATX, multiple companies can be registered for a single VAT company. Let's say there is a group of companies A, B, and C. These companies, if they wish, they can register separately for VAT purposes. Company A can get separate VAT registration, company B can get separate VAT registration, and same goes for company C. But if they wish, they can take a group VAT registration. Means if they register for group VAT registration, they would be having single VAT registration number. they would be filing a single VAT return on behalf of 3 companies. A single VAT return would be submitted quarterly. No need to file 3 different VAT returns at each quarter end, because now the companies are registered as a VAT group. In this case, no separate VAT returns should be submitted at each quarter. A single VAT return would be submitted for each quarter for the 3 companies. If any asset is transferred, sold in between these companies, no VAT would be charged, because for VAT purposes, these 3 companies are considered as a single company, as a single unit. So any materials, any asset which is transferred, sold, exchanged in between these 3 companies, no VAT would be applicable. And number 3rd point, any one of these can be the representative company. Representative company means, let's say this group has decided that company C would be dealing all of the VAT affairs to HMRC. Means company B would be the representative company for VAT purposes. Company C would be the representative company for VAT purposes. Company C is liable to submit tax return on behalf of the whole group. Company C is the main like information point for dealing the VAT purposes. If the companies are registered as a group for VAT purposes, then no VAT would be charged on the sale of building within the group member companies. It's not only to the extent of buildings. Any asset which is sold within the group companies, no VAT would be charged. But why I have specified the buildings word over here? Because in this question, the VAT area is pertaining to the land and building. So that is the sweet and simple reason that I have marked the specific word here, buildings, but I'm guiding you. If the companies are registered as a single VAT group company, then there would be no VAT be charged on the sale or purchase of any asset within the group member companies. Not only to the extent of building, but for every asset, no VAT would be applicable. Is this thing clear? The VAT implications for companies? Yes, Hunad, very right. In VAT group, all of the companies are jointly liable. Very right. Let's say, let me elaborate your point with the help of an example. Company A, B, and C got single VAT number, and they are registered as a single VAT company for VAT purposes. And company C is the representative company, means preparing tax returns, submission of tax return is the responsibility lies with company C, because company C is representing the group in front of HMRC. But let's say if there are any omissions, if there are any mistakes, then not only the company C is liable, the whole group will become liable. Same partnership business in partner is liable. All of the partners, the partnership business is liable for any mistakes, and any group would be liable for any mistakes, any errors, any penalties, and all that. Are you guys clear with the VAT implications for the company? I'm waiting for your answers, please, my dears. Would appreciate if you guys are okay, we can move forward then. And if you have any point in your mind, please do share. All right. Another petty area which is examined in this question, that is SDLT. SDLT stands for Stamp Duty Land Tax. There are basically 2 things, SD and SDLT. SD, stamp duty, is mainly for shares and securities only. And stamp duty land tax is basically for land and buildings only. But in this exam question, it's talking about stamp duty land taxes, means this area is relevant for us. And the requirement is for companies. Stamp duty, land taxes are applicable on the purchases of and lease of land and building. It's not only the purchase, even if you are leasing the building, if you are taking a building on lease, still the stamp duty, land taxes are available. Keep remember, these are applicable on non-residential properties only. Means the commercial properties. SDLT is not applicable on residential property. Stamp duty, land taxes are there for non-residential properties. To some extent, it is nil, then 2%, then 5%. The relevant information is given in tax rates and allowances, and you are able to get the information while sitting an exam, and you can open your tax rates and allowances. So the relevant limits are given in exam. But to some extent, stamp duty, land taxes is not applicable. Afterwards, it is applicable at 2%, then afterwards at 5%. And this information is given in exam. Keep remember, stamp duty, land taxes not applicable on residential property, and the payment duty lies with buyer, not the seller. If you are selling a land and building, you will not be paying the stamp duty, land tax. Who will pay? The buyer will pay. This payment duty lies with buyer. The last point, no need to pay stamp duty, land tax if the companies are subsidiaries under common control. Means if the transaction in between the group companies, in that case you are not required to pay stamp duty, land tax. Let's say there are 3 companies. Let's say again I'm taking the example of 3 companies, A, B, and C. If a building is sold from company A to company B, but these companies are subsidiaries under common control, then although this company B is a purchaser company, but this company still will not be paying any stamp duty, land tax, because no need to pay SDLT if the companies are subsidiaries under common. If the companies are group companies, then company B, although it's a purchaser, although it's a buyer company, but still due to this group structure, stamp duty, land tax is not applicable. The last area of discussion, afterwards we'll be moving towards the question. This area is like from the overseas subsidiary and overseas branch. Few key differences are in front of you. I'm giving you 1 to 2 minutes time to read these differences and try to learn few points at your own. Then I will start my discussion right after 1 to 2 minutes time. A question from a participant with respect to previous slide. As I just marked subsidiaries in the group. The question is regarding group on stamp duty. Do you mean groups for CGD purposes, group loss group? I can tell you the percentage which companies 75% holding companies are which are in the group, then no stamp duty, land tax is applicable. So if you remember, 75% is basically pertaining to group loss group companies. For capital gain group, it is direct shareholding should be of more than 75 and indirect should be of more than 50. But for group loss group companies, the related percentage of whether that direct shareholding or indirect shareholding should be of more than 75%. So for SDLT, stamp duty land taxes, for if the transaction in between the 75% subsidiaries, then no SDLT is payable. By the way, thanks for asking this question. So hopefully this point is helpful for all of us. The first thing you should think, why, in which situation we should be talking about overseas subsidiaries or overseas branch. First of all, think about the basic requirement when we should think about overseas subsidiary or overseas branch. What could be the situation where we can talk about these two situations? The answer of this question is very simple. Let me repeat my question. When we are required to think about these two possibilities, the answer is whenever a UK company wants to expand its business in an, there are two possibilities. I repeat, when a UK company wants to expand its business, then the business can be expanded overseas by these two situations. Number one, UK resident company can have an overseas subsidiary. Means, let's say, apply this situation on yourself. You are a UK resident company. You want to expand your business in overseas. The first available option, you can register a separate legal entity in other country. So that would be basically overseas subsidiary, and that would be a separate legal entity. If a company is registered in any other country, so that company has to pay tax in that company as well, because it has a separate legal status for that country, as well as that company is a subsidiary of your company. It means the profits will also be taxed in UK as it means the profits will not be taxed in UK, because you would be at the end of the day, you would be getting the dividends, and dividends are paid from the post-tax profits. Another option for expanding business overseas is to have an overseas branch. Branch word shows you are not going to register a separate legal entity. That branch would be the part and parcel of your existing business. What are the further implications? So hopefully you are crystal clear with the basic requirement when we should be thinking about these two possibilities. Whenever there is exam question is talking about the expansion of the business. For expanding business overseas, two possibilities are in front of us. Let's talk about each and every single point one by one. If you are opening an overseas subsidiary, means due to this overseas subsidiary, number of associated companies will increase. So what will happen? If the number of associated company increase, so it would be impacting the calculation of the limit, that is augmented profits when compared with the profit threshold. So this profit threshold of 1.5 million, this profit threshold of 1.5 million is to be apportioned due to two reasons: when there is less than 12 months accounting period, and due to the number of associated companies. So if you have opened up a subsidiary would also be meeting the definition of associate company, and the number of associate would be impacting the threshold limit of 1.5 million. Number two, dividends paid by overseas subsidiary. These dividends not part of corporation tax calculation in UK because it's a separate legal entity. This company would be paying tax in other country in which it is basically registered. And the other implication is that losses cannot be transferred between overseas group companies. Although it's a group company, although it's a subsidiary, but still we cannot adjust losses, because in the group loss group, the companies which are in losses group, by definition, to the extent of definition, overseas subsidiaries are added in this definition. But for practical loss implications, loss adjustment implication, losses cannot be transferred between overseas group companies. The other impact, overseas subsidiary has to pay tax in overseas only as it is a separate legal entity and registered in overseas country. So at the end, we would be taking the dividends, and these dividends are not subject to UK corporation tax. The last thing, how we can have an overseas subsidiary. There are two possibilities. If you want to open up a subsidiary in UK, you have two options. You can purchase the share capital of any existing company. That's the first option for getting overseas subsidiary in overseas country. You can purchase the share capital of any existing company there. Or number two, incorporate a new entity and become the shareholder of that entity. So these are two possible options to open up a subsidiary, whether you can purchase the share capital of an existing business, or number two, you can incorporate a new company in the overseas country. And the related tax implication we discussed one by one. For expanding overseas, the other option is available to open up an overseas branch. As it's a branch, it's not a separate company. So no impact on the number of associates, no impact on the 1.5 million of the threshold limit. As overseas branch is a part of entity, hence any profits and losses of these company are subject to corporation tax in UK. As it's not overseas subsidiary, it's an overseas branch, it's a part of our existing company. So any profits which earned in overseas branch, on such profits we have to pay corporation tax in UK. Furthermore, any profits and losses can also be transferred to this, would get relief on the overseas branch losses. If you are incurring a loss in the overseas branch, that loss can be taken to UK company's profits and can be adjusted. Overseas branch profits are taxed in both UK and overseas because the company is operating in overseas country, means this company has to pay tax in overseas country, but this company is also part of existing company in UK. So that's the reason, being part of UK company, this company has also the tax in the UK as well. It means this company would be paying two taxes. Number one, tax in overseas country due to its operation in overseas country. And number two, being part of the existing company in UK, this overseas branch profits will be taxed in the UK as well. Although there is a double tax relief, treaty is available or not, that depends. And if the DT tax treaties exist, do accordingly. And if tax treaty is not available, then double tax relief is available. Now, how we can have overseas branch in overseas country? Again, we have two possible options for having an overseas branch in other country. by acquiring the trade and assets, or by permanent establishment PE. So keep remember, if you want to open an overseas subsidiary, you can purchase a share capital of an existing business, or you can incorporate a new entity there. And if you want to have overseas branch, then the difference is here you are not going to acquire the share capital. Here you are acquiring the trade and assets of the business, or by permanent establishment means you can open up an office there. You can expand by opening an office in overseas country by the same company name. So is this discussion clear? Based on the things we discussed till now, finally, it's time to move towards the exam question. Let me open the exam question, and which is available on the ACCA platform. Hopefully you can see my window, which is like ATX UK September December 22 paper. And I have opened up the first question, the basic background of the question, then exhibits, Hum Limited Group, basic information, schedule of information from role. I don't know who is role. We'll come to know while reading the scenario. Number 3, email extracts from your manager. Let me guide you an important thing. Whenever you would be solving the question for attempting question, the main important thing is to follow the email extract from your manager, because here you will come to know that what are exactly to do. To-do list, you can take the extracts from your manager. That could be at number 1, that could be at number 2, that could be at number 3rd place. But keep remember, extracts from your manager is basically a to-do list to follow for solving your question. Whatsoever question you are solving, the email extracts from your manager is the main thing. Although the client background, the client information is also relevant, but for solving question, this thing is important for us. Then Moses, just give me a minute. I'm going to answer your query. Basically, this email extracts from your manager is linked directly with the requirements. The things which discussed here, the things which your manager has asked you to do so, are directly linked with your requirements, right? Based on these 2 extracts. Okay, as one participant is asking, what is the relevance of assume today's date is 1st July 22? The simple answer is, while answering your requirements, as I told you, we have to follow the report format. So this date is basically the date which we are writing, which will be writing that the reply date, basically reply from ourselves. We are tax senior, we are solving, we are preparing all the things. So this date is relevant for us, means let me show you from the, I would be using this date while at the very first steps at time of solving the question. Don't worry. Scenario is the basic information. You should assume that today's date is 1st July 22, means your reply should be made on this date. Your manager has received a schedule of information from role. Who is role? The finance director of Hum Limited. Role is the finance director of Hum Limited. The Hum Limited group of companies, it's not a single company, it's a group of companies, is a client of your firm. A subsidiary of Hum Limited will sell 2 buildings. Now it's giving you an idea what is going to happen in this scenario. A subsidiary of Hum Limited will sell 2 buildings, which is currently uses in its trade. Another important thing, these buildings are qualifying business assets, because it is very clearly mentioned that these buildings are used in trade and will purchase a trading activity situated overseas. As we just discussed about the overseas branch and overseas subsidiary, after selling these buildings, this company will be purchasing a trading activity which is situated overseas. Okay. Information from your firm's files concerning the Hum Limited Group, the schedule of information from ROL, and the extracts from an email from your manager detailing the work. As I told you, this thing is most important for us because what we are supposed to do, we can from here, and extracts from an email from your manager detailing the work he requires you to do are included within the exhibits. The work to be carried out relates to a corporation tax refund, which is thought to have been made by mistake. Yes, it's pertaining to ethical area. Company received a tax refund, but which is thought to have been made by mistake. It means examiner would be asking that in this situation, what we should do. Being a tax advisor, being a tax firm, what should we do? What are the relevant steps for us to do in this situation? Number 2, the tax implication of the proposed sale of 2 buildings, as thus one of the subsidiary want to sell 2 buildings. The tax implications for the proposed sale of the building and the taxation of the profits generated by an overseas trading activity. It is not clearly mentioned which form it will be, whether it's an overseas branch or overseas subsidiary. It's not clearly mentioned here, but we need to calculate the taxation of profits generated by overseas trading activity. The following exhibits available on the left-hand side of the screen provide information relevant to the question. Hum Limited Group background information from the files as at 1st July 22. Schedule of information from ROL. ROL is the finance director of the Hum Limited Group on this date, and email extract from your manager means manager met or discussed the things with ROL and now giving you tasks to perform. This information should be used to answer the questions requirements within your chosen responses. Now, what exactly is the meaning of chosen responses? If you want to address your answer in typing form, then you can use the word process area. And if you want to perform calculation steps, you may use the spreadsheet area. But keep remember, there is also a thing available, Scratchpad. If you write anything in the Scratchpad, that is not gonna considered as your answer. Your answer would be considered if you have written anything in the word process or the spreadsheet in the response option, then this thing would be considered as your part of answer. If you have marked any points, anything in the Scratchpad, that is a rough working pad, you can say. If you have written anything over here, it will not be considered as your part of answer. So please do not write anything over here pertaining to answer solution. If you want to use online screen calculator, that's in front of you. But my suggestion always for a student to use your own calculator. And if you are directly using the spreadsheet, then you can use the formulas. But for practical calculation, you can use your manual calculator. And okay, let me open the Hum Limited Group. It's a structure of the group as in front of us. I have opened up the first exhibit, Hum Limited Group. That's in front of us. I would not be reading by the way, before opening the exhibit, first of all, do consider the requirements. What are the requirements? Prepare the memorandum. So means we have to follow a report format thing for gaining the professional marks as well. Prepare the memorandum. As requested in the email from your manager, the following marks are available: A, B, and C. It means our answer to this memorandum should be divided into 3 categories: A, B, and C. As per the requirement, we shall be answering the same requirements, A, B, and C. Same pattern as required, same pattern would be used while answering. No need to consider any other thing, any extra thing. No. Same pattern of answer would be used while answering. So that's the way of gaining the professional marks. As you are addressing the things as required by your manager, you are following the same sequence. In this memorandum A, Hum Limited, a refund of corporation tax. It's about 5 marks. As I told you, ethics area is always for 5 marks. B, sale of 2 buildings. Sale of 2 buildings. For these 2 buildings, you need to consider the tax implication for 7 marks. In part B1, you need to consider the tax implications for 7 marks, and part B2, post-tax proceeds available to Hum Limited Group, and this requirement is for 14 marks. So by looking at marking scheme, you can easily plan that multiple things are required to perform in part B2 of the question, because the requirement is mainly for 14 marks. So multiple aspects are to be considered while attempting this part. Part C, UK taxation on the profits generated by the co-code trade, as evident from here that company wants to purchase trading activity situated overseas. With respect to this, you can see it's also included in the requirement. UK taxation on the profits generated by co trade means this co would be the overseas branch or could be the overseas subsidiary. We need to discuss the UK taxation implications from the profits gained from the overseas branch or overseas subsidiary. Professional marks will be awarded for the approach taken to problem solving, the clarity of the explanation and the calculation, the effectiveness with which the information is communicated. And what is the effective manner? As I told you, please follow the same pattern while answering. You need to follow the same sequence while answering. So you would be giving your answer in effective form, in the effective communication form, and overall presentation and style of the memorandum, and the professional marks are 4 marks. Before moving on, you can see for each 35 mark question, 5 plus 4, 9 marks are the marks which are normally the same for each situation, for each question. While attempting kit questions, you may also follow the same things for gaining 5 plus 4 marks, because normally all of the things are to some extent, to somehow the same for each scenario. Okay, now Hum Limited, Exhibit 1. We have read the requirements. Hum Limited. Hum Limited have 2 subsidiaries, 100% subsidiaries. By looking at 100%, we are comfortable with this thing that these companies are meeting the definition of capital gain group. These companies are meeting the definition of group loss group and all that. Hum Limited has owned the whole of the share capital of SAR Limited and TOC Limited for many years. Hum Limited has acquired these 2 companies many years ago and has 100% shareholding. All 3 companies are UK resident. Okay, fine. For tax purposes and prepare account to 31st March each year. Means the accounting period and date is also same for each company. And all of these companies are resident in UK. There has only been one significant capital transaction in last 4 years. On 1st Feb 2020, which company? The SAR Limited. This one purchased a building from an unconnected party for use in its trade for 90,000. This company, on this date of 1st Feb 22, SAR Limited purchased a business asset from an unconnected person and the purchase value is for 90,000. Do not forget this point. We shall be using this point while answering, while claiming the group rollover relief, as I told you. Because if a group company is disposing an asset and if other group company, any of these 2 companies purchasing another business asset from an unconnected party, then group rollover relief can be claimed. So this is how you would be reading your question and also would be planning few things while reading the question. Further, the last point, in their ordinary trading activities, all 3 companies make wholly taxable supplies and are registered as a group for the purposes of VAT. Means no company is dealing with the exempt suppliers or the reduced rated or the, all of the companies are making the taxable supplies at the standard rated. And one more important point, the 3 companies are registered as a group for VAT purposes. Means for VAT purposes, these 3 companies are treated as a single company for VAT purposes only. So it's about the basic background of Hum Limited Group. As we have read the requirement, two key takeaways are SAR company purchased an asset on 1st Feb 22 for 90,000. Number two, all of the companies are registered for single VAT group. From this exhibit, these two are the two keynotes. Let's move further. Schedule of information. Schedule of information is basically from Raul, which is the finance director of Hum Limited. Background. We are aiming to develop the business of Talk Limited. Talk Limited is one of the company in the group here, Talk Limited. Background. We are aiming to develop the business of Talk Limited and to generate the cash flow for the group. To achieve this, we have decided the following course of action. Talk Limited will sell 2 of the 3 buildings. Talk Limited, the group company, has 3 buildings, and for expanding business, they are considering few steps, few course of action. The following course of action: number 1, Talk Limited will sell 2 of the 3 buildings, which is currently uses in its trade. It will then continue to trade in the UK from its 1 remaining building. Okay, fine. Talk Limited will acquire a trading activity situated overseas, means that could be an overseas branch, that could be an overseas subsidiary, that depends. We shall be looking for this thing, what's included in the scenario that Talk Limited wants to expand its business overseas, but for expanding business, which option they are looking for, whether they want to open up a subsidiary or whether they want to open up an overseas branch. Buildings by Talk Limited, sold by Talk Limited. Talk Limited will sell building 1 and building 2 between now date is 1st July 22 and 31st March 23. These are the tentative dates. In between these 2 dates, Talk Limited will be disposing 2 buildings, and both the buildings are qualifying business assets, because somewhere it is mentioned that these buildings are uses in trade. Any asset which is uses in trade, that is basically qualifying business asset. With respect to first building, the acquisition date is 1st July 14, cost 290, buildings to be sold to SAR Limited. Oh, one important point, you can see Talk Limited would be disposing this building 1 to SAR Limited, which is a group company. As we have discussed, multiple implication in capital gains. No gain, no loss. Number 2, for VAT purposes, these companies are single VAT group companies. No VAT implications. Number third, for SDLT, if there are group companies, then no need to pay stamp duty, land tax. By looking at one single name, all of these points should be clicked in your mind. Talk Limited will be disposing building 1 to its other group company. Okay. And if an asset is transferred, sold within the group companies, then the transaction would be at no gain, no loss for CDD purposes. The transaction would be at no VAT, because these companies are registered as single VAT group. Number third, for the buyer company, for the SAR Limited, who would be purchasing this building, no stamp duty, land tax would be paid, because all of these companies are in 100% capital gain group, right? Sale proceed at market value is 440,000. Any asset for capital gain purposes is always disposed at market value, right? So the disposal would always be recorded at market value. Building 2, purchased on 1st May 2009, cost 320. It is being sold by Talk Limited to an unrelated company, to an unconnected company, means outside the group, and the sale proceed at market value is 650,000. No option to tax for tax purposes of VAT has or will be made in respect of the building, means these buildings are considered as, if the no option to tax means no, not waiving the waiver option, it means the buildings would be treated as exempt supplies for VAT purposes. Next thing, acquisition of the trading activity situated overseas. As Talk Limited has, the group has planned for Talk Limited would be disposing 2 buildings and would be continuing its business by having the third one building. And Talk Limited want to expand its business and acquisition of a trading activity situated overseas. Talk Limited has intended a trading activity in which is activity which is carried on entirely in the country of Kinesia by Quaco. The country name is Kinesia and the company name, the overseas trading activity, the company name would be Quaco. Quaco is resident of, for tax purposes in Kinesia, the trade is profitable and the profits are subject to corporation tax in Kinesia at the rate of 25%. The purchase of this trade will take place in between Jan to 31st March. You can see the building disposed in between these 2 dates and the other business assets will be purchased in the relevant dates. So the time period condition for qualifying the investment time period is met because the disposal of old asset and acquiring the new asset is held in the qualifying reinvestment time period, right? So this is how you think while sitting in your exam. Talk Limited will acquire the trade in one of the 2 ways. These are the 2 possible options. By purchasing the whole of the ordinary share capital of Quaco. Can you please tell if you are acquiring the whole of the ordinary shares of any other company in overseas? So whether you are acquiring this company as an overseas subsidiary or overseas branch, we have discussed a few minutes ago about this point. By looking at this word, can you please tell whether in option 1 you are considering to acquire this business as an overseas subsidiary or overseas branch? Very right, overseas subsidiary, perfectly answered. Because in overseas subsidiary, we have read this point. If you are acquiring the share capital, of a company, that would be in the overseas subsidiary situation from here. And on the other hand, if you would be purchasing the trade and assets, so acquiring the trade and assets is basically held for having overseas branch where you would be acquiring the trade and assets. Let me go back to the question slide. By purchasing the whole of the share capital of Quaco for 500,000, Quaco would continue the trade and the resident for the tax purposes in Kinesia. Okay. Means in overseas subsidiary situation, these profits are not subject to UK taxes, right? Number 2, by purchasing the trading assets from Quaco means in situation 2, you are considering to acquire this business as an overseas branch, and the subjects and the profits would be subject to corporation tax in UK as well. But in this situation, DTR would be available because this company would be is a resident of Kinesia and has to pay 25% tax there. But as well as if you are acquiring the trading assets, it will be the part of the current business of the current group, and which means the profit will also be subject to UK taxes, right? Then maybe possible DTR would be available, and if there is no tax treaties existed, then DTR would be available. By purchasing the trading assets at market value, and the market value of the assets are company's goodwill is not a business asset. Building which is constructed in June 12 worth 465,000, and lorries which is a tangible and movable asset. Means for ROR purposes, if we are looking at the 3 assets, only buildings will qualify for ROR because company goodwill is not treated as qualifying business asset. So no ROR is available because not meeting the definition of business asset. Lorries are movable assets, although they are plant and machinery, but ROR is available on fixed plant and machinery. Lorries are tangible and movable and portable assets. So ROR will not be available on the purchase of lorries. And if we talk about buildings, yes, building is a business asset to the extent of 465,000. This amount can be qualified for a rollover relief, but also don't forget about this amount because another group company purchased another asset, business asset, in the qualifying reinvestment time period. So I would be using in my answer the 90,000 value and the 465,000 value because both the assets are purchased within the qualifying reinvestment time period. Both the assets are qualifying business assets. So we can claim the rollover relief based on the assets value. There is no double tax treaty existed between UK and the country of Kinesia means if the no tax treaty is existed, then the profits are subject in both countries and double tax relief is the lower of would be available. DTR would be available in this situation if no tax treaty is existed. Double tax relief is available at the lower of tax paid in Kinesia and the tax paid in UK. We are done with the reading of the background of the companies. Now extract. The final thing where we'll come to know that what should be included while answering this part, the entire question. Your manager is asking you to prepare a memorandum for client file consisting of the work set out below. Number one, you have to answer about Hum Limited refund of corporation tax. Hum Limited has received a refund of corporation tax from HMRC. No, Moses, keep remember, when we talk about capital gain group and the group rollover relief, then a company A would be disposing an asset to unconnected company, and the other group company, let's say company B, is purchasing another asset from any other unconnected company. Means the transaction should be with the unconnected persons by the group companies. Okay, let's read the first thing with respect to the refund of corporation tax. Hum Limited received a refund of the corporation tax from HMRC in respect of the year ended 31st March 17. Okay, fine. The company has not been able to determine why the refund was made and suspects that it may be a mistake by HMRC. Mistakenly, HMRC has refunded an amount. So company also know this thing that mistakenly HMRC has refunded this amount. Set out the actions which our firm should take and the matters which we should bring to Rawls' attention in relation to this refund. So this A is pertaining to the first requirement. So I would be coming back to the requirements as raised by our manager, but by looking at, as we are well aware of the background of the company, Hum Limited Group, as we have also read the things which are provided by Rawl, and now going to solve the requirements one by one by reading the things from the email extracts from your manager. So that's the appropriate way. You are not required to read all of these once at once. Now, if you want to start your answer, you can start your answer by looking at the first, second, and third things one by one, right? So I'm not going to read the part B and C because I would be coming back after completing part A. It's a theoretical area. Don't waste your time by typing. You can take few things like I have selected these, Control C and Control V. But before that, as we have to answer in a memorandum form, so what we are required to do is that for gaining 4 marks, the first thing, Hum Limited Group. For Hum Limited Group, what we are going to do is that we are working for the files, or we can write for tax manager, but do not write the tax manager because we are not only working for tax manager, we are basically working on the files, right? For which client? Client name is Hum Limited Group. Subject, what you are required to do is that refund of corporation tax, sale of buildings. The tasks which are basically given to you are the subject line, sale of buildings, and purchase of overseas trade. Do not write overseas branch or overseas subsidiary. Just make it simple, make it normal. Overseas trade, as we shall be discussing both possibilities. Dated. On which date you are preparing? One of you asked why we are assumed to take the date of 1st July 22, because you would be using the same date over here while answering the parts. As you are done with the memorandum, if you do perform these steps, you would be getting like 1 to 2 marks. From the 4 professional marks, you would be getting 1 to 2 marks by only writing these few things for each and every question in section A for first question. The further 1 to 2 marks can be taken by presenting your answer in a professional manner. Unlimited refund of corporation tax. As the client is not aware why the refund has been made by HMRC, and the requirement our manager is asking us to provide, set out the actions which our firm should take and the matters which would bring to Rawls' attention. What should we do? First thing, as client is unaware why they have received this refund, we should assist Rawls in investigating this matter of refund from HMRC, because as we are the tax advisor of the client, we should assist Rawls in investigating this matter of refund from HMRC. As evident from scenario, this refund has made mistakenly, we should consider the following actions. What are the possible actions in this case? First of all, we shall be start investigating why this refund has made, and further thing, as the client has highlighted this point that this refund has made due to some mistake by HMRC. What's the difference? As you are asking, Moses, what's the difference between memorandum and meeting notes? If the requirement is specifies to prepare meeting notes, then just mark meeting notes. And if the requirement is for memorandum, then you may also write memorandum at the start of answer, right? And if it's about meeting notes, then you may write the meeting notes. That doesn't matter. Now, what are the required steps? I'm waiting for the things from your side. I know each and everything, but I'm waiting for your side. If I'm giving you this scenario, what you will do in this case? Perfectly answered. The first action could be, I'm not going to write the complete answers. I'm just giving the key notes and would be discussing each and everything. Refund the amount. The further explanation could be refund the amount to HMRC, because even if they have refunded this amount, but we have to refund the amount to HMRC to avoid any penalties, and interest. Let's say afterwards, HMRC come to know that we mistakenly refunded this amount to client, and even if you have accepted the amount silently, then you would be liable for penalties and interest. Furthermore, HMRC should be informed as soon as possible. So they would be able to check about the refund, whether they made it correctly or not. Number third. So these 2 points are with respect to HMRC. But what else to think? Should we incorporate the client intention? Because here we have answered client with respect to HMRC, but should we need to consider the client perspective? Is the client is willing to disclose this amount, willing to put on this case to HMRC or not? Yes, we are also required to address this issue in this part of the question. If role, the finance director, is unwilling to return this money to HMRC or unwilling to inform HMRC about refund, then should we go and tell the HMRC that role is not doing so? The finance director firm limited is involved in something fishy. Are we required to do this thing? Yes or no? Just answer yes or no. Perfectly answer no, we should not do like this. If there is unwillingness at the part of the client, then we would have ceasing as tax advisor for client. Furthermore, if the amount is material, then the firm's money laundering department should be informed at earliest possible. Do not disclose this information to third parties. Do not disclose this information directly to HMRC. Do discuss internally in your firm and inform your firm's money laundering department about this case, about this situation. If they think appropriate, they would be launching the appropriate steps under money laundering rules, otherwise not. But you being a tax advisor is not liable to initiate any whistleblowing or any leaking the information, right? A common question which comes to our mind, whether we should write all these in paragraphs form or we can use these bullets format. You can do both things, but for better presentation, the starting point should be in the form of paragraph. Afterwards, you may also use bullets for highlighting the key areas, right? So we are done with our first requirement. Let's move towards, even if you have written, it's not like that if you're working for 5 marks, you would be writing like 15 to 20 lines. No, please do not waste your time. Do write quality. You would be gaining marks. Be sure with one thing that if you are writing the relevant points, yes, that's fair enough. I have not written all of the points as I have discussed many things, but you may narrate all of these things. As I have discussed while answering, I have not written because I'm actually guiding you, because if we follow the same things, so it would be taking time. I have to complete the question in the required time, and with discussing all that, I'm not only solving the question, I'm actually explaining the things with you. So that's the reason I'm explaining multiple things and writing the key points. But you can narrate all of these points in your answer, right? What else is there? Extracts from email. As we have done with the first part, now taking the same heading in the part B, what we are supposed to do, we should discuss the sale of buildings by Talk Limited. So I have copied and pasted here. From here, we shall be solving the sale of building. But what to do in this part, that's important to know, and how we can know by looking at the extracts from your manager. So I'm going to start reading from here. Part B1. Tax implications. Explain the chargeable gains which will arise and the VAT and the stamp duty land tax implication. Means it's not only the tax implications. For answering part B1, you should consider the capital gains implications, the VAT implications, and SDLT implications for Hum Limited Group of the proposed of 2 buildings. Stopping my part B1. Part B1. In part B1, what we are going to explain the tax implications for both the buildings. Let me mark the heading first. Then in each heading, we shall be doing the solution. Building 1. For building 1, 3 things to consider: capital gains. For building 1, VAT. For building 1, SDLT. Same things can be copied and pasted for building 2. For building 2, the capital gains, VAT implications, and stamp duty land taxes. So there's a way of answering the part B1 of the tax implications on the disposal of 2 buildings. By the way, you are not required to bold or italic or underline. If you have enough time, you can do, but basically you are not required to do this thing. Think what would be the capital gain for building 1. Let me show you the scenario in front of you. Schedule of information from roll by looking at these 2, building 1 and building 2, and by having the knowledge which we gained while reading, you may decide what will be the tax implication. I'm giving you 1 minute time to decide what are the tax implication under capital gains, VAT, and SDLT for building 1, and same for building 2. The information is in front of you. Very easy, because Talk Limited and SAR Limited, building 1 purchased by SAR Limited, both the companies are in same capital gain group. So the for first building capital gains implication, we can write no, both the buildings, both the companies are in capital gain group. Hence, no gain, no loss would be calculated. That's fair enough to answer. No need to write lengthy areas. Further point you can mark here, 75% means 75% group companies. So both the companies are in capital gain group, hence no gain, no loss would be calculated. VAT implication. As both the companies, for which companies we are talking about, the Talk Limited and SAR Limited are in capital gain. So both the companies are registered under VAT group. So no VAT implications. Third point, both the buildings, do not write, just copy and paste it. Control C. Both the buildings are in common control. Both the buildings are subsidiaries under common control. So no SDLT implications. That's a simple answer. Keep remember, we are solving this requirement. We are solving part B1 for 7 marks, and for surely by writing these 3 points for building 1, you will be having 3.5 marks. I bet. With respect to capital gains, now a gain of, if you remember from the question scenario, 320 and 650, the difference would be the capital gain. A gain of 330,000, show the values in brackets, 650,000 minus 320,000, the cost of the asset. A gain of 320,000 would be calculated. As the building sold to an unconnected person, instead of unconnected person word, use the unconnected company. VAT implications. By the way, it's a commercial building and it's an old building because you have purchased this building on 1st May 2009 and disposing now on 1st July 22. What it shows, this building is a commercial building. This is a commercial building. This is an old commercial building. Why I'm using the word old? Because it's more than 3 years old. This is an old commercial building and not opted to tax for VAT. Hence, it would be treated as exempt supply for VAT purposes. Are you guys okay with this point? Got the idea of why I have written? Because this building is used in business. It's old commercial building purchased in 2009 and sold on 1st Jan 22. So it would be considered as exempt supply. So no VAT implications. No VAT would be charged. Are you guys okay with this specific point with respect to VAT? I'm waiting for your answers. Perfect. By the way, you are disposing building to an unconnected company. And the purchaser company would be paying SDLT. Is there an implication for your company? No. The buyer company would be paying SDLT and no implications for Talk Limited. That's it. As we think that we should write more and more, it's not like that. No, even there is no taxable gains. By the way, 10% or 20% are for individuals. My dear Esther, as you are mentioning capital gain tax rate 10%, 20%, that which are pertaining to individual persons. We are talking about companies' capital gains, right? So no need to write these 10 or 20. You would be making a mistake if you. Okay. Also, hopefully you are done with the point number 3 for SDLT. Talk Limited is a seller company. Buyer will pay the SDLT, so no tax, no SDLT implications for Talk Limited. So we are done with the part B1. In a short manner, we have solved the requirement. So what's in the requirement B2? Extract from the. In B2, we are supposed to do this thing, copy, and B2. In B2, we are going to solve this. Read from the extract from your manager. With reference to the condition which need to be satisfied, explain the availability of rollover relief. As I have guided you, ROR would be available on the disposal of a business asset and a purchase of a new business asset in respect of chargeable gain on the sale of 2 buildings. Your explanation should include the consideration of both the possible ways in which Talk Limited might acquire the Quaco business. Okay, because after disposing these 2 buildings, the proceed will be used for acquiring the other company's business assets. So rollover relief can also be claimed. So your explanation should include the consideration of both the possible ways which Talk Limited might acquire the Quaco, because Quaco can be acquired by having an over by acquiring the share capital or by acquiring the trading assets. On the basis of, in part B2, the other thing to do is that on the basis that Talk Limited acquire the Quaco business in a manner which maximize the amount of gains which can be rolled over, calculate the post-tax proceeds available to Hum Limited as a result of the sale of the 2 buildings. I'm giving you 3 to 4 minutes time to plan this part of the question. If you want, I can show you the relevant thing, but you should consider these 2 points. I'm giving you 3 to 4 minutes time for planning the part B2. Afterwards, I will start my discussion. We have read the scenario. After the disposal of these 2 business assets, these 2 buildings, the Talk Limited would be acquiring the Quaco, and the Quaco can be acquired into 2 possible manners. You need to calculate the post-tax proceeds available to Hum Limited Group as a result of the sale of 2 buildings. Your time starts. I would be answering part B2 in 3 different steps. Number 1, availability of ROR. Number 2, Quaco acquisition. Number 3, the amount of the rollover relief and the post-tax proceeds. So what I'm going to do is that while answering, I'm going to divide this part of the answer into 3 subparts. Number 1, ROR availability. Here we need to elaborate the prerequisites for claiming ROR because it's mentioned here with reference to the condition need to be satisfied. Explain the availability of ROR. It means you are required to write when we can claim ROR. Number 2, the other aspects would be with respect to purchase of Qua company, then rollover relief amount and post-tax proceeds. I have divided the B2 answer in 3 different things which we are required to do. Over here, you can write the relevant points. ROR is available where qualifying business assets are sold and purchased within qualifying reinvestment time period, in effect within the 48 months. I'm not going to write, I'm just explaining that what should be written over here. As we are talking about ROR, rollover relief is available where qualifying business assets are sold and purchased within the qualifying reinvestment time period. And furthermore, a group rollover relief can also be claimed. Why I'm writing this point? Because at the very start of the introduction, it was mentioned that one of the group companies, SAR Limited, purchased an asset for trading activities, and the other company in the group is disposing the asset. So that is the reason I have mentioned this generic point over here. And furthermore, a group rollover relief can be claimed if group companies disposed and purchased the asset. Then ROR would be available to the extent of fixed plant and machinery, which is in fact only the what is the fixed plant and machinery schedule of, as if we will be acquiring the Quaco, then this building would only qualify for rollover relief because company goodwill is not a business asset, lorries are movable assets, so ROR would not be available. With respect to that point, I can write here rollover relief would be available to the extent of fixed plant and machinery, which is in fact only the buildings of Quaco, and ROR would not be available on company goodwill and movable plant and machinery. So here we talked about the basic points with respect to ROR availability. Although I have used the short terms, but you are required to use the full forms in your actual answers. The last point to write here, rollover relief amount depends the reinvestment made in new qualifying business asset, whether it's a complete reinvestment, whether it's a partial reinvestment. So let me write this point for your reference in brackets, complete or partial reinvestment. So that would be the decision point that how much ROR is available for the companies. Purchase of Quaco. There are 2 possible options. The first possible option, acquiring Quaco share capital would not lead towards the rollover relief because shares are not business asset. Why we are writing this point? Because there were two possible options for acquiring Quaco business. The first option was acquiring the share capital. If you would be acquiring the share capital of Quaco, then rollover relief would not be available because shares are not business assets. So the basic condition is not met because ROR is only available to the extent of business asset. But if Talk Limited acquired the trade and assets of Quaco, then rollover relief would be available to the extent of cause building and not on cause goodwill and lorries as not meeting the prerequisites for ROR. Here we have referred because we have already discussed the points above on which ROR is available, on which ROR is not available, and now linking the scenario to the Talk Limited if required the trade and assets of Quaco, then ROR would be available to the extent of cause building and not on cause goodwill and lorries as not meeting the prerequisites of the rollover relief. Are you guys okay? Are you guys agree with the points mentioned here? Okay. Last thing, the amount of ROR and the post-tax proceeds. My dears, if you are not agree to any point, please do raise your concern. I'm here to guide you. I'm here to explain you. You can also summarize if you like keenly observe the situation and if you are able to join the points, then you can summarize easily. Next thing, by the way, on this property one disposal, instead of property, use the word building. Building one disposal has no capital gains implications as the transaction, although there is cash involved, but no capital gains implications as a transaction in between capital gain group companies. Building to disposal resulted in capital gains of, somewhere we have calculated the capital gains like 330,000. Building to disposal resulted in capital gains of 330,000. But it's not asking about the capital gains, but about the post-tax proceeds. Writing the short points, but linked points linked to the scenario for surely gonna give you the relevant marks. Don't worry about this thing. The objective is your answer should cover each and every aspect, right? And for building two, we are going to calculate the post-tax proceeds. Proceeds from building two are, which is mentioned in situation, you receive 650,000 on the disposal of building two. rollover relief just give me a minute. Yes, please. Amount reinvested and rollover relief, which amount you reinvested on which you can claim rollover relief. Let me guide you. One of the asset purchased by another group company for 90,000 plus. From above, Quacos, you can only claim ROR to the extent of the building, which value 650 no, it's not. That is, let me check. That was 465,000. It means one of your group company has acquired a business asset and you are also making the reinvestment for 465,000 in purchasing the other asset. Proceeds from building to the amount which is reinvested and rollover relief can be claimed. Can you please tell me the difference? What's the difference of these two? Okay. By the way, as answered by yourself, 95,000 is the differential amount. Now, please listen carefully. You receive proceeds of 65,000, but these proceeds will be reduced by making the reinvestment in other qualifying business assets, which are two assets. One of the asset purchased from other group companies, so group rollover relief amount is 90,000, and one of the asset purchased by Talk Limited itself for 65,000. It means the amount reinvested in qualifying other business assets to the extent of the sum of these two amounts, uninvested amount is basically calculated as what we have calculated here. So basically that is the uninvested amount. From the proceed, this amount is still uninvested amount, which is subject to chargeable gains, which is subject to corporation tax. On this uninvested amount, corporation tax at 19% is applicable. And if we apply the corporation tax at 19%, so what is the relevant amount? 95,000 into 19% is gonna give you 18050. Thank you, Hunat. 18050. Finally, the disposal of the building to disposal resulted in capital gains of 330,000. But let me elaborate also. But as the other qualifying business assets are purchased, so the amounts are basically reinvested and the tax is applicable to the extent of uninvested amount, which is 95,000, and a corporation tax of 18050 is applicable. Post-tax proceeds will be can you please tell me the answer if you have received an amount of 650,000 by making all adjustment, all things, or claiming after reliefs, paying the tax of 18050, what is the post-tax proceeds? From 650,000 of the proceeds, after all workings, you have to pay corporation tax at 18050, the remaining amount of 631,950. So that is the after tax proceeds amount. So we have addressed all of the questions in part B2. First of all, we discuss about the availability of rollover relief. Then we discuss the purchase of QACO, considering both options, the share capital and acquiring the traded assets. And if shares are acquired, no rollover relief will be available. And if the traded assets are purchased, then ROR would be available to the extent of the building value, which is 465,000. Then we concluded all of the above discussion by calculating the amount of rollover relief and the post-tax proceeds. Rollover relief can be claimed to the extent of the asset purchase within the other group company and the asset purchase from the TOC Limited, and the only asset which qualify for ROR is the QACO's building. The uninvested amount is still in the pocket of the company is 95,000, subject to a corporation tax rate at 19%. So the tax is 18050 from 650,000. If this amount of tax is paid, the remaining is the after tax proceeds. So this is how we have smartly summarized our answer, covering all of the aspects of the requirements. Are you guys okay? My dears, are you guys okay with all of these discussions? Perfect. Let's move towards the last area, UK taxation on the profits generated by a QACO trade, considering both the options, both the possibilities. So let me copy from here, word process, and we are going to solve requirement C. UK taxation on the profit generated by QACO company's trade. If TOC Limited acquired share capital of QACO, other possibility, if TOC Limited acquired QACO's trading assets. Means here we need to discuss, by the way, what is required. Explain. You need to write down the things. You have to narrate the things. No need to perform any calculation. Just explain your answer. Simply explain how the profit generated by QACO trade in country of Kinesia will be taxed in UK and the relief which will be available in respect of the cost of trading assets. If number one, T acquired the ordinary share capital of QACO, you should assume that this will not result in a charge under CFC rules. Okay, fine. TOC Limited, number two possibility, if QACO's company's trading assets are acquired, you should assume that TOC Limited will not make an election to exempt the profits of permanent establishment in Kinesia from UK taxes. So it simply means you need to narrate both the possibilities, what will happen. Over here means QACO would be considered, if the share capital of QACO is acquired, it means QACO would be considered as an overseas subsidiary and profits will not be subject to UK taxes, and QACO would be paying tax in the country of Kinesia, as it has a separate legal entitlement in Kinesia. Any dividends from QACO have no UK corporation tax implications. Any disagreement? As we are working for the requirement for 4 marks, we need to discuss both the possibilities. So we have considered the first possibility. If the share capital of Quaco is acquired, so basically it will be an overseas subsidiary for us. And if any dividends received from overseas subsidiary, no corporation tax implications in UK. As the company is registered in other country, that company would be paying taxes in the country of Kinesia. Let's talk about the second possibility. Here, if Talk Limited acquired Quasco trading assets here, Quas profits will be subject to UK corporation taxes, as now it is considered as an overseas branch of UK company. As evident, no tax treaty is there. Hence, profits are taxed twice in Kinesia as well as in UK, but at the same time, double tax relief would be available. Esther, as it's not asking for, like, let me guide you. Here in the, as you are, by the way, all of you are required to please listen the question raised by a student. Listen this question very carefully. I think I would also mention the rate of, tax of 25% as overseas tax rate to help with the professional marks. Yes, I would be writing, but first of all, let me guide you. Let me write the basic information extracted from the question scenario. Then obviously we shall be writing. I would be linking that 25% here. Don't worry. Here, cost profits in the second situation, if the Talk Limited acquired trading assets of cost trading, here the cost profits will be subject to UK corporation tax, as now it is considered as an overseas branch of UK company. As evident, no tax treaties existed there. Hence, profits are taxed twice in Kinesia as well as in the country, but in Kinesia as well as in the UK at 25% and 19% respectively. At the same time, double tax relief would also be available at the lower of the tax paid in Kinesia and or the tax paid in UK on overseas branch profit results. So you are expected to do all of these things, right? No. Moses, you are asking, will it be right to talk about CFC implication on share capital acquisition? It is clearly denied in here. Explain how the profits and relief which will be available in respect of cost of trading assets. If Talk Limited is not under CFC control, you should assume that this will not result in CFC. If it is clearly denied, you should not consider anything. So please do not waste your time. As also for second point, it's mentioned that you should not consider permanent establishment, exempt election. So you are not required, because this requirement is pertaining to 4 marks only. For 4 marks, if you would be writing these 2 points, C1, in this manner, you would be getting the full marks. And if you're writing the C2, you would be getting the full marks. Don't worry. And if examiner has asked you not to consider anything, so please do not waste your time for considering those irrelevant areas. So we are done with the detailed discussion of this question. And hopefully now you all have an idea that how to write answer in your exam. Please do not write more and more. Think more and write less. Think more means plan more and write quality points. You would be getting the full marks, right? Don't waste your time by writing the irrelevant points, and where required, do write the general points, but the same general points should also be linked somewhere to the part of the question. We have not mentioned any general points in all of the areas. Where required, we mentioned the general points because the requirement was explain the availability of rollover relief. But then again, we link the availability of rollover relief to the actual scenario. Are you guys okay? Is this thing clear? I'm going to convert this answer. Although you can find the past paper answer, but as we have performed this question, so I would also be sharing the answer, our written answer as well. Don't worry. So could you please confirm me? Are you guys clear with this thing? Yes, Vinod, we can discuss after class. We can discuss over call. Don't worry. Okay, my dears, I'm keeping till here. Although another question was planned, but we shall not be able to complete that question in the remaining time. So the other exam question will be discussed in the same pattern as we started today's discussion. Let me show you. In tomorrow's class, what we are basically going to do is that in next session, in tomorrow's class, we shall be discussing the areas tested in the second question of this exam attempt. The relevant areas will be quickly discussed tomorrow, and thereafter we shall be solving the question as we did in detail in today's session. Thank you, Easter. Thank you, Moses. Thank you all for the appreciation. And my wish is to pass your exam in flying colors. And if you follow a definite approach, plan more, think appropriately, write less, link the relevant points, short points, join the points, you would be getting marks, inshallah. And I have shared the tomorrow's plan. We shall be doing this exam question 2 of September, December 22 attempt. First of all, we shall be quickly revising the areas, then we'll move on towards the question. Inshallah, see you in the tomorrow's class. Take care and stay blessed. Don't worry, you would be finding the recordings of the sessions, as well as you would be finding the PDF notes and the related stuff which I'm using. I would be sharing all of these with you guys. Take care. Thanks for your time. Thanks for joining the session. See you tomorrow. Bye.